Good morning, everybody. It is. Uh, it is the 20. Oh gosh, 24th. It's 7:24 in the morning. It is the 2nd of February, and it's Friday. Hooray! We have some big. Gosh, I have a lot of charts up here, don't I? Probably drag one of those out of the way. We've got a whole slew of stuff coming out right now. At 7:30, we're going to have payroll, unemployment rate, factory orders, Michigan, U of M sentiment. I mean, we're going to have a whole collection of data. I was just watching Fox Business this morning and last night. They were talking that the forecasted GDP in the States for the first quarter is going to be something like 5.2%. And so that's one of the things that has kind of spooked the markets a little bit. Of course, if we've been following Gann's analysis, we could have projected a turnaround around this time anyways. Okay. I want to take a look real quick because we got 5 minutes left. We should really take a look real fast at the cryptocurrency market as our first kind of little focus of the day, and then we'll get to our trades from yesterday and how those panned out, and looking at Forex for the day. Well, we've got about 4 minutes. Let's just take a peek at these. No, we don't have enough time. I don't want to look at currencies yet because I like to be flat on these kind of numbers. Unless I'm into profit already, I may move my stop. I mean, oftentimes I won't trade with stops, or I'll have like a 200, 300 pip stop. But the news, big economic news like this can cause a lot of whipsaws. If anybody's been trading for any length of time, you know how these charts can just go joop, 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 joop. But let's look at our cryptocurrencies first. We have had in Bitcoin, we're going to take a peek at Bitcoin the most. We have had a real push down. We have had date range. Okay, so starting from the all-time high to now, we've had 47 days of a downtrend. All right, we have had a 47-day distributive cycle, bear cycle, and that's very good. I think that's actually a very healthy move. I think it's important that these elevated levels be tested and that we get back into lower areas because the higher you go in prices, the fewer participants you get. You got to get in on pullbacks. You need to have corrective moves. Cryptocurrencies are kind of a Wild West mover, but if we're looking at where we're at, this is totally fine. And if you've been paying any attention, if you've been with us for a while, I've been bringing up these things ever since really about the middle of the month. In January 16th, I posted on TradingView that, again, I'm not the biggest fan of Elliott waves, but that if we've had our first impulse move in Bitcoin, then we are in our first corrective wave, and that corrective waves often kind of end, a little bit above or below that third leg on the shorter frame. So I have the area from January 16th. I have it pointed towards the 5th. I think I wanted it to be on the 4th and 5th of February at the 7,000 value area, and that's pretty much where we are. We've got a good bias for continued down momentum until the 5th. But we can reverse anytime, really. Between the 26th And the 26th of January and the 5th of February, we have strong reasons for. I hate TradingView chat, but I like to see what people are fretting about. Sometimes I call this this is a zone indicator, TradingView's chat indicator. Generally, if you do the opposite of what everybody's doing, you'll be okay. That's a joke. Don't actually do that. But it's kind of a good factor to kind of get the feel of actually don't ever go to chat rooms. Don't go to chat rooms. Don't go to do people go to chat rooms anymore? But I mean, don't go to like big forums to get your trading ideas. Even I'm gonna even say don't go to services like this because a lot of trading is trading is a solitary career. Trading is you're like the lone wolf, the lone ranger. You are you're Rambo. You have to really be on your own, and it's really important that you make decisions based on your own analysis. Now, that may sound hypocritical or a little odd for me saying that because we provide a service like this, but I mean, I'm not here to tell you what trades to take. I'm providing setups and I'm just showing you my style of analysis. Hopefully that I view it more that I'm coming from an educational standpoint as opposed to just buy this here, just buy this there, just buy, just a signal service, because we don't want to be signal services. Okay, let's look at this news here. Okay. Average weekly hours, worse than expected. 34.3 versus previous of 34.5. Is that average hours worked? The average hours released is an indicator of labor cost, inflation, tightness of labor markets. Okay. I was going to say, I mean, I used to work a 14-hour job, and then I started working for myself, and now I work like 16 hours a day. But it's different because I'm addicted to my job. I have a problem. I love what I do. My wife doesn't understand that. I shouldn't talk about my wife on recording because I know she probably looks at these every once in a while. But let's see, if we're looking at average hourly earnings year over year, the actual was 2.9% versus the previous of 2.5, and we actually had a beat of the consensus of 2.6 though, so that's good news. All right, again, not looking at the Forex stuff yet. Just want to keep looking at this here, but again, we have a really high probability of a bounce. We have retraced. Where did I put it? Okay, right here. You won't see these a lot, but things that move, they like to move in rhythms. So things that are moving in a bull cycle, things that are moving in a bear cycle, they typically like to move in a certain amount. So it's like things like to move down a certain amount of days, or they like to move down a certain amount of dollar amounts, or they like to move a certain at a certain angle, or like a value. Sometimes it's percentages. And so